buenas tardes a todos. Bienvenidos a nuestro evento más internacional, Finect Best Investment Opportunities Summit. Esta es la 5ª edición. En los últimos 2 años pues hemos tenido 4 ediciones y lo verdaderamente interesante es que los escenarios han sido muy diferentes. Os quiero dar la bienvenida a todos, tanto a aquellos que se conectan por primera vez como a aquellos que ya nos vais siguiendo desde hace pues, algunos eventos. Y lo que es muy interesante es que en estas 4 ediciones, en menos de 2 años, los escenarios socioeconómicos han sido muy diferentes. Estamos ahora en un periodo muy complicado donde es muy necesario buscar rentabilidad y no equivocarse. Hay que ser más selectivo que nunca. Las empresas han vuelto a sus beneficios, tal y como habían previsto varios expertos, fundamentalmente por la vacunación y por la recuperación de las economías, pero han surgido otras amenazas. E incluso amenazas que ya se preveían, ya se han producido, como es el caso de la inflación, que nos resta poder adquisitivo si no somos capaces de encontrar esa rentabilidad. Pero hoy por hoy, de modo transitorio o no, la vida es más cara para todos nosotros. Por otro lado, el rebote económico post-COVID se ha ralentizado según todos los datos económicos de los cuales disponemos. Tenemos incertidumbres con China, después sobre todo de las medidas intervencionistas que ha aplicado a determinados sectores. También la crisis de la macroinmobiliaria Evergrande está afectando. La crisis energética que todos conocemos y que forma parte de nuestras vidas en este momento también está impidiendo pues, un cierto crecimiento global. Pero, por otro lado, seguimos manteniendo muchas medidas de estímulo, tanto de los bancos centrales como de la inversión pública, y tanto en Estados Unidos como en Europa. O sea, es un mercado, es un escenario muy complejo donde, bueno, pues los 8 ponentes que van a estar con nosotros hoy nos van a aportar luz sobre dónde ven ellos oportunidades, dónde ven ellos activos donde invertir y fórmulas ganadoras para adquirir esa rentabilidad que necesitamos tener. Vamos a tener una visión muy global porque van a ser 8 expertos, 8 gestores de prestigiosas entidades que se van a conectar desde Hong Kong, desde Londres, desde Estocolmo, desde París, desde Zúrich, con lo cual vamos a tener una visión muy global. Además, luego van a contestar las preguntas que les van a hacer asesores financieros y selectores de fondos. Y vosotros también vais a poder participar interactivamente, y luego os explicaremos de qué modo, para poder valorar las ponencias y las ideas de inversión que nos van a aportar nuestros expertos. Solo me queda agradecer a las gestoras que participan con todos nosotros, como son Allianz Global Investors, Carmignac Risk Managers, Edmond de Rothschild Asset Management, Fidelity International, M&G Investments, Natixis Investment Managers, Nordea Asset Management y Bontobel Asset Management. Darle las gracias a todas ellas por la colaboración y la disposición que han tenido a acompañarnos en este evento, que es la 5ª edición de Finect Bios. No me quiero olvidar tampoco de agradecer a nuestras asociaciones amigas, EFPA España, ASEAFI, CFA Society Spain, por la colaboración que han tenido con nosotros y que siguen manteniendo en la celebración de estos eventos. Y, por supuesto, muchísimas gracias a todos vosotros por atender este evento. Espero que lo disfrutéis. Y aquí empieza la 5ª edición de Finect Bios.
Hola a todos, ¿qué tal? ¿Cómo estáis? Bueno, bienvenidos a una nueva edición de Finect Bios, la 5ª ya, ¿eh? Fíjate, cómo pasa el tiempo, 5ª edición de Finect Bios en la que vamos a tener otra vez muy buenas ideas de inversión. Yo estaba echando un vistazo a algunos de los fondos comentados en las ediciones anteriores y en algunos casos la rentabilidad ha sido muy positiva. Bueno, recomendamos seguirlo porque, como decía Antonio, es un mercado muy exigente el que tenemos ahora mismo. Esperamos que disfrutéis con esta jornada de Finect Bios. Como siempre, los más veteranos en Finect Bios ya lo sabéis. Tenemos un grupo en Finect, grupo BIOS, Best Investment Opportunities Summit, en el que está toda la información, el centro neurálgico de la información que tenemos en Finect Bios, en esta edición de Finect Bios, desde las presentaciones, que las iremos colgando cada vez que termine uno de los gestores, por supuesto el visor tanto en español como en inglés que se puede seguir, las fichas de los fondos de inversión de los gestores que van a participar, los enlaces, por ejemplo, de las asociaciones amigas, tanto de EFPA como de CFA, para que al final de la jornada podáis responder unas preguntas y optar a llevaros esa certificación, esas horas de recertificación. O sea que ahí tenéis toda la información. También la información con el enlace para que podáis participar interactivamente valorando a las ponentes y también con unas encuestas que vamos a hacer ahora. Ahí tenéis el enlace que os vamos a pedir que abráis ya, ¿vale? ¿Estáis viendo esto en el móvil? Pues lo habréis en el navegador. Si estáis viendo en el navegador, pues abréis otra pestaña con esa información. finect.com/bios, www.finect.com/bios. Os pido que lo abráis ya porque vamos a hacer una prueba para que veáis cómo funciona la interactividad, la herramienta que vamos a tener para ayudarnos a tener vuestro feedback, ¿de acuerdo? Siempre lo hacemos, a nosotros nos gusta empezar a hacer este test para que uséis la aplicación con una pregunta un poco de broma. Entonces, si entráis en la URL que os acabamos de decir, www.finect.com/bios, ahí os aparecerá de momento una página en blanco, pero ahí os va a aparecer, en cuanto yo lo diga, unas respuestas a la pregunta de prueba, a la pregunta de bromi, que digo yo, que vamos a hacer para que empecemos a interactuar, ¿vale? Entonces, espero que lo tengáis abierto, finect.com/bios. La pregunta que vamos a hacer para romper el hielo va a ser esta. Después de la pandemia, de la nevada, del volcán, de todo lo que hemos tenido, ¿qué será lo siguiente? ¿Qué nos espera, madre mía? ¿Qué será lo siguiente? Y os vamos a dar estas opciones. A ver cómo estáis de humor, ¿eh? Invasión alienígena, meteorito que nos impacta, apocalipsis zombie o plaga de langostas, ¿eh? 4 opciones bonitas. Vamos a ir con ello para votar. El tiempo para votar empieza ya. Finect.com/bios. Ya sabéis, para estas votaciones que iremos haciendo, esta es la de bromita, pero iremos viendo poco a poco. Voy a ver qué estáis votando. Hemos estado a punto de poner en estas escenas terroríficas un concierto de Leticia Sabater, pero no me han dejado. Vamos a ver ahí las opciones. Ahí está, estáis ya votando todos, fenomenal. Invasión alienígena, meteorito, apocalipsis zombie, plaga de langostas. ¿Qué será? ¿Qué estaréis eligiendo? ¿Qué os parecerá lo más relevante? Bueno, pues parece que la mayoría os estáis decantando por ese apocalipsis zombie. Hombre, esperemos que no. Ese mundo Walking Dead, esperemos que no. Así que nada, gracias por participar. Mira, ahí está. Ha ido cambiando la encuesta, pero efectivamente esa sería la más elegida. Finect.com/bios, ya sabéis, para votar las respuestas de la gente. Vamos a hacer ahora una segunda pregunta. En esta segunda pregunta ya es un tema más serio, ¿vale? En esta segunda pregunta lo que queremos saber es si ahora mismo tuvieseis que elegir una zona geográfica para la que invertir, ¿por cuál os decantaríais? No vamos a dar como opción global, porque mucha gente elegiría la global, sino que vamos a dar estas opciones. Europa, Estados Unidos, Asia u otros, ¿vale? Esta va a ser la pregunta. Así que, ¿en qué área geográfica invertirías ahora mismo? Si pudieses, el tiempo para votar empieza ya. Venga, os agradecemos mucho vuestra participación. Ya debe estar llegando esta segunda encuesta para que podáis votar. Ahí está, ahí la tenéis. Por cierto, que esta encuesta para pulsar el sentimiento también la hemos hecho entre nuestra comunidad de YouTube, en la comunidad de Finect en YouTube, que os animamos a seguir el canal de Finect en YouTube y a darle a me gusta a este vídeo, de hecho, ya que estáis, a me gusta a este vídeo. Y ahí la mayoría de la gente ha elegido Estados Unidos, en la encuesta que hemos hecho en nuestro canal en YouTube. Pues mira, aquí tanto Estados Unidos como Europa están ahí a las dos a la par, así que bueno, muchas gracias por vuestra participación. Dejaos si puede ser esta dirección abierta y así iremos volviendo en las próximas votaciones, ¿vale? Por cierto, en esta edición valoramos vuestra interacción mucho, ya sabéis, valorando las presentaciones de los gestores. Si queréis preguntarnos, queréis enviar también a media@finect.com, ¿de acuerdo? Ahí podéis enviarnos las preguntas. Así que simplemente recordaros que cuando esté hablando cada uno de los gestores o en algunos momentos de su intervención veréis un código QR. Ese código QR, si lo capturáis, iréis directamente a la ficha del fondo en Finect y veréis ahí toda la información, entre ella también la opción de cómo contratar ese fondo de inversión muy interesante. Ya sabéis que en Finect tenemos esta plataforma para iniciar la contratación de fondos con toda la información, así que muy interesante si lo podéis ver. Así que ya lo sabéis. Vamos a empezar ya enseguida con la primera de las ponencias de esta edición de Finect Bios de este miércoles 20 de octubre, que ahora mismo pues 16.35 y Bitcoin por encima de 66.000. Bueno, vamos a empezar ya con el primero de nuestros invitados. Empieza este Finect Bios, quinta edición.
Technology, so many breakthroughs that have shaped the world over the centuries and that are now transforming our societies at an ever faster pace, even inspiring us to think of other worlds. But at Edmond de Rothschild, we believe it is in the here and now that we must build the future. At Edmond de Rothschild, supporting innovation is in our DNA, and we are taking action on a daily basis and for our daily lives. How? By focusing on technologies that benefit our society from one hemisphere to the other. We promote the most sustainable business models across all our businesses. Investors, researchers, entrepreneurs, together we'll create our tomorrow. Together we'll be bold builders of the future.
Inauguramos esta quinta edición de Finect Bios en la ciudad de la luz, donde nos espera Jacques-Aurélien Maxireau. Desde París, este gestor saca partido de la revolución tecnológica con su fondo Edmond de Rothschild Big Data. Tanto le apasiona la inversión y la tecnología que incluso dedica parte de su tiempo libre y su dinero a ser business angel en empresas relacionadas con la tecnología y el software. Jacques, gracias por estar con nosotros. Te escuchamos.
Jacques-Aurélien, bienvenido. Tiempo para ti.
So good afternoon, everyone. Thank you very much for attending this video conference. So my name is Jacques-Aurélien, co-head of equities at Edmond Rothschild Asset Management and lead manager of the Big Data Fund. And today, my objective is to tell you about the big data opportunity and how we look at it down the road. So what is big data and why should we care? On this page, what you see is that if information is a river, at the beginning of history, thousands of years ago, it was a very small one. And with a different innovation across the years, with writing, printing, telegraph, computers, etc., this small river became a bigger one. And now, over the last 20 years, it just went into an ocean of data. So many data that a word was coined for it, which is big data. Would we still talk about big data 10 years down the road? I don't think so. It would be just the word as in which our children will be used to and grown into. So data will stay, the big will be removed, but the impact on our daily life will be real, and it can be an investment opportunity as well. So maybe big data is a bit of a marketing gimmick, but there is a strong underlying shift behind it. And if talking about big data, we try to compare big data, artificial intelligence, robotics, etc., etc., they all have one common denominator, which is that data is a key strategic asset. I will walk you through a very simple example. When Google managed to beat the world champion at the Go game, the Go game being the chess game of Asia, basically. The way it did was to gather a lot of data, millions of data of games played online by traditional players, like you and me, if you know how to play. I don't, but many do. And with all this data, they could then use algorithm, machine learning, deep learning, adverse neural network, reinforcement learning. There are many techniques, but all you need to know is that the data is a key asset on which the algorithm will be trained. And once this algorithm trained by Google was strong enough, it could be the world champion at the Go game. And then people call that artificial intelligence. In a very narrow sense, it is. But the one important aspect of all that is that without the data, the algorithm would not work and there would not be that kind of application. So data is the new oil of the 21st century. We do believe so. And this is why we decided to put our focus, to put our mindset and energy into trying to see how to capture the big data related opportunity. Just one last example. It is obvious, but always interesting to remind of it. Google and Facebook, they are only in the business of making sense of information that we create. Facebook did not create your friends. Facebook just organized contents created by your friends so that you spend as much time as possible on their platform to sell you advertising. But their core knowledge is to organize information wisely, or not wisely, but at least economically, in an economic, interesting way. Google is more of the same. Google didn't create the web. They just organize the search between the website. So they organize the information, they organize the data, and doing so, they have a very profitable business. Of course, Google is more diversified than just web indexing, but keep in mind that this is still their core business and the most profitable one. So these two companies, they knew exactly how to make sense of the data, and they have thousands of PhDs that kind of did create this technology that we need. But what is really interesting today, and where we believe there is a lot of opportunity, is outside of the pure technology. Let's take healthcare, for example. Healthcare is a sector in which data will create a lot of value. And when we talk about data, it's not about clinical data. It's genomic sequencing data. It's exogenous data, because we know that even knowing your DNA is almost useless if we don't have the correlation with other data to understand how it will express itself. So personalized medicine, predictive medicine, participative medicine, preventive medicine will need data to fulfill their promises. This is only one example, but just to make you think about the fact that data is everywhere, not only in the technology space. So why should one only focus on technology when there is so much value that will be created through data across the different sectors? This is why we decided to create the Big Data Fund. And what is really pioneer in our approach is the fact that we look at the cross-sector aspect of big data. We look at three sub-thematics: infrastructure providers, like the hardware, the software, the storage of big data. And then we look at analytics, which is really pure data science, how to make sense of this data, how to organize them. But the most unique part of what we do, because the first two buckets, you can find some of them in traditional tech fund, is the data users. Looking at traditional sectors, who owns the data? Who has a well-articulated data strategy? Who is really serious about digitalization and being relevant in the upcoming world? So this is really how we capture the thematic with the full spectrum. For us, to put it another way, do I really want to own somebody selling 10 million a year of software? Or do I want to also own somebody that will make 100 million euros of savings per year through the use of the software? That's exactly what this data user is about. So we look at the full market with this data angle to it in order to create value for our shareholders, which we have achieved over the last 6 years since the fund was created, with a very concentrated portfolio focused on technology, business model, sustainability, and valuation. And I will give you a bit more detail about how we do it in a second. So quickly on this slide, you see the three buckets: infrastructure, analytics, and data user. And you can see that our portfolio, as recently as end of August, is very diversified between the three buckets. Pure tech companies look like Akamai or SailPoint. 1/3 of the web traffic in some Western European countries comes from Akamai. Akamai has hundreds of thousands of servers across the world, routing the traffic more and more intelligently. So it is really at the backbone of all our data-driven economy. And having all these data centers all this data across the world also allow them to provide a lot of cybersecurity services because they know what's coming, they know it could attack you, and they know how to respond. So we see that these companies are invisible to most of us, but they play a very critical role in our economies. SailPoint, data governance, identity management. We know that in this world, our identity and corporate identity in particular is very important because being compromised from an IT standpoint can be devastating for many corporates. But looking beyond this kind of pure tech names, what will we do? We will look basically at what a traditional company is doing. Let's take a bank. Is a bank transforming digitally? Is it spending the right amount of money? Does it have the executive with a tech background knowing what is happening? Do they have the right collaboration in place? How do they compare to their competitors? How fast is the industry moving? Because sometimes being a slow mover in a data-driven world is not that bad if your competitors are even slower than you. So we will really work this. It's almost like a ESG filter, but it is a tech filter to how companies look at the big data landscape. And what it needs to achieve is strong earning growth, strong return on investment for shareholders of the company and ultimately of this fund. Now we spend the last few minutes talking about the current tech environment. Rightfully so, a lot of investors are worried about tech and innovative company valuation in general. Because in the COVID world, a lot of people bought tech in big amounts without necessarily spending too much time on what is valuation right? Is the governance good? Will this company still have an edge 5 years from down the road? These are very key questions that we'll keep asking ourselves every day with the team running this fund. Because last year was a year of peak flows, like many inflows into tech innovation, and peak multiple, meaning that people today don't need to be convinced about tech and big data potential. They need to be convinced to stay disciplined. And this is exactly what we are doing. So this is why I put in this presentation this funny meme, this funny image, showing that we believe we are a small boat, very disciplined, very nimble, and we feel really good about the prospect of the next 12, 24, 36 months. We do believe, however, that investors are right to be concerned about some of the big growth, bad governance, unprofitable tech that is out there in the market, doing well so far, but might not be doing that well over the next few years. So caution is warranted, but we remain highly optimistic about the prospect for the fund and this thematic in particular. One reason for optimism is the market is really active. Not only investors are interested in innovation, but also M&A by corporates has been very decent. Since we launched the fund 6 years ago, we had M&As in many parts of the portfolio. You can see in the healthcare technology sector, in the ad tech sector, in the infrastructure of big data and software sector, and even in the connected and autonomous vehicle sector. To give you an example, Harman Kardon on the right was considered by many as only a high-end sound system equipment supplier. But this company was also one of the biggest integrator of Microsoft and Android system for connected cars. And they were investing heavily into cybersecurity for cars. And this company was bought by Samsung Electronics a few years ago. So this is another illustration of how we look into traditional company. For many, Harman could be only an old economy sound system supplier. For us, it was somebody that was doing the right thing to position itself for the connected car and then the autonomous car, not competing directly with the Tesla of the world, but really having its own way of creating value. I could not walk into all these examples, but it tells you a bit about our approach. The last thing that is important to mention is performance. Not absolute amount, but regularity and ability to navigate cross cycle. 2016 was the worst year for tech funds in general. It was a really good year for the big data fund, as you can see on this chart, with a 18+% performance. So big data by Edmond Rothschild is not about taking exponential risk. It's about benefiting from a strong growth thematic with a conservative angle, being disciplined. And this is why we are very enthusiastic going forward for the fund prospect and our shareholders. I thank you very much for your interest and happy to take any question you might have.
Muchísimas gracias, Jax. Vamos ya con las preguntas. Tenemos una pregunta que esta nos ha llegado de Álvaro de la Rosa, que es selector de fondos temáticos en Avante. Álvaro pregunta, ¿qué industrias creéis que pueden beneficiarse del Big Data y todavía no lo están aprovechando? ¿Y qué compañías del fondo pueden ofrecer soluciones a estas industrias para beneficiarse de la temática?
So thank you very much for this question. I think there are many sectors that are not yet benefiting from the big data potential, although some claim they are already doing it. And innovation has a different velocity depending on which sector you are considering. Taxi and Uber, it was really fast to spread in the market. Whereas if we take healthcare, for example, which is a sector in which I'm the most enthusiastic about long term, is less than 3% of the portfolio today for one reason. It hasn't really started yet. But we believe it will come in the next 5-10 years, and this is why we are positioning for that. We have companies that are clearly involved. We have IBM with its Watson healthcare unit that has been buying billions of data sets in the healthcare sector to train its algorithm in order to improve healthcare outcome. We do also have Illumina in the gene sequencing space that is a clear leader by a wide margin that will benefit from this genomic revolution that will be combined with other data, a key route to improve healthcare outcome down the road. So that would be my two names I would mention, one that is an old economy one, and the other one that is a new economy one. And we have more of them to come in the next few years.
La siguiente pregunta nos llega de Juan Hernando, que es Head of Fund Selection en Morabank. Pregunta Juan Hernando, dice, dentro de los fondos temáticos ha funcionado muy bien vuestro fondo este 2021 por estar menos expuesto al sector tecnológico. ¿Tenéis en mente seguir con un posicionamiento parecido, no tan centrado en la tecnología?
So we will always have a strong focus on technology stocks because it has to be 50%, 50, of the fund at all time. So you have a kind of a high purity, high level of exposure, pure exposure that will be here at all time, but we have room to maneuver and look at other sectors. And it's true that today we have a lot of exposure outside of tech because we believe you have very strong risk reward out there. But we are clearly positioning ourselves, looking at the market to benefit if there was a strong correction to be made. But right now, we don't feel we need to change our approach. To give you some numbers, the portfolio companies in aggregate, they are growing around 15%, 1.5 per year, which is really strong growth. And they are doing so at a multiple of 18 times price to earning. 18, which is below equity markets. So we don't feel like the companies in portfolio are overvalued, overheated, even though they did perform well this year and last year. We believe the positioning doesn't need to change to be efficient and constructive.
Vamos con la siguiente pregunta, porque al final es un sector con una temática muy concreto, Big Data, pero claro, el horizonte de inversión es muy alto. Hay muchas compañías que pueden utilizar Big Data precisamente para dar soluciones y para ofrecer mejores productos y servicios a los usuarios. ¿Cómo lo hacéis? ¿Cómo llegáis a esas compañías?
So, believe it or not, but only 300 companies make up our investment universe because we are very selective about the subsector in which we believe big data will have a strong impact in our investable time frame, which I mean by that is in the next 3 to 5 years. So we are very disciplined in the way we look at it. And we are even more disciplined to remove all the companies that are tech washing, which is basically the same as greenwashing, but telling you are doing a lot of AI related stuff when you can only barely make your IT system work properly. So this is really part of our work, is to tell the difference between the ones that are really doing it and the ones that are really only pretending. Because in our environment, where everybody is focused on digitization and talking about it, there's a lot of pretend, and this is our work as top picker to tell the difference.
Uh-huh. En este escenario que estamos viendo, en las slides que veíamos esta slide con los argonautas del Señor de los Anillos levantando la mano. ¿Dónde está el Mordor? ¿Dónde está el mayor problema para esta estrategia? ¿Dónde estás viendo los mayores riesgos?
So this is a tough question. I would say we are not worried about interest rate at all, because this portfolio, as we are disciplined on valuation, means that we are kind of a low duration equity fund, meaning that our companies are reasonably valued. Most of them have pricing power. So interest rates is one of the least of my concern. My top concern, and it has always been, and it is a concern for the team in aggregate, since the fund was launched, is to make sure that we always have company with good valuation and good technology. If you have good valuation but not good technology, it can end up very badly. So being very focused on technology, what's going on, is really the core of our approach and our biggest risk. Because if you buy a company that is not competitive anymore, or that doesn't have a technological edge anymore, it can get more complicated. So that has been the main factor. It will remain in the next few years. If I were to highlight one specific factor, but which is, I have to say, the same for everyone, is China. I don't think there's a lot of contagion risk to the rest of the world, but we hope that the macroeconomic, let's say, governance of China will be done as smoothly as it has been done in the past by the authority there. So that would be maybe a bit of a risk for the macro picture. But even then, this fund is not necessarily about the macro, even though we have macro exposure like everybody. We are more about big data exposure. So we believe the fund will still do okay, but short term it could correct like any equity fund if we get a hard landing in China, which is not our base case, basically, at Edmond Rothschild.
Hablabas antes de este tech washing, compañías que pretenden tener más de la tecnología de las que realmente tienen. ¿En qué tipo de empresas o en qué tipo de áreas estáis viendo que se produce más esto, ¿no? Que se intenta lanzar un mensaje y luego no hay tanto? La última pregunta.
So this is one where I won't make a lot of friends if I do mention them specifically. So I will try to stick with a broader topic. I would say you have two categories of companies doing a lot of tech washing right now. You have new companies in traditional sectors that want to portray themselves as tech company. I'll give you an example. At the end of the day, Uber, the name of Uber on the stock market is Uber Technologies. But what kind of technologies are really proprietary to Uber? I mean, they are leveraging a lot of existing technology, but they are more like a traditional tech company that is very nimble at using tech. This is why they managed to have an edge versus traditional taxi company. So you have these new guys that want to be considered as tech company and get tech valuation rather than, let's say, ride-sharing type of valuation. And you have old companies, and you have some in the banking sectors that are portraying themselves as very modern, whereas they are not. But on the other side, you have traditional banks, and some of them in Spain, that have ratings in terms of digital experience that are as good as some of the hottest startup in the sector, like the Revolut of the N26 of the world. So in the same sector, you can have very different scenario and outcome, and this is what makes our work very enjoyable on a daily basis. Is that we learn a lot every day, and every situation is different. So sometimes the market wants to put everybody in the same bucket. We think it's a mistake, because even in traditional banks, for example, you have huge discrepancies.
Muchísimas gracias por tu tiempo hoy con nosotros, Jacques Aurélien. Ha sido un placer tenerte con nosotros. Thanks a lot.
Thank you very much. Have a nice day.
Pues estaba yo justo viendo aquí la ficha de este fondo, del gestor que acaba de comentar. Ya sabéis que en el grupo en Finect, de BIOS, grupo BIOS en Finect, tenéis la información de todos los fondos. Por ejemplo, aquí, pues este fondo veo una rentabilidad a 3 años del 18,5, el gráfico, cómo se puede contratar, por ejemplo, Ironía, MyInvestor, Renta 4. Toda esta información, como digo, la tenéis en Finect, en la ficha de cada fondo de inversión. También tenemos un escaparate de fondos de megatendencias, donde podéis encontrar muchos de ellos, otro de fondos de tecnología, o sea que muchísimos. Vamos a valorar, si os parece, esta primera idea de inversión que nos ha traído Jacques Aurélien. Ahí tenéis de nuevo en pantalla la dirección. Por favor, teclead esto en el navegador, en una pestaña al lado de la del directo, www.finect.com/bios, por favor, tecleadlo, www.finect.com/bios, porque vamos a votar. Primero os pedimos que valoréis la idea de inversión. ¿Qué os ha parecido este fondo, este Edmond de Rothschild Fund Big Data, que nos ha traído Jacques Aurélien? ¿Vale? Lo tenéis listo, finect.com/bios. El tiempo para votar empieza ya. Ahí está, tenéis 10 segunditos para votar. Ahí está, esa visión del Big Data, pero no solo con compañías tecnológicas, sino con todo tipo de compañías que puedan aprovechar estos avances en la gestión de los datos, en la medición, en la aplicación de las empresas. Interesante, ¿verdad? Muchas gracias por vuestra votación. Vamos a votar ahora lo que ha sido la exposición, cómo lo ha expuesto Jacques Aurélien, cómo lo ha contado, la presentación. Por cierto, la presentación ya sabéis que según van acabando los gestores los vamos colgando en el grupo también en Finect para que las podáis consultar. Así que, si os parece, vamos a votar. ¿Qué os ha parecido la exposición? El tiempo para votar empieza ya. Recuerdo, www.finect.com/bios, os damos 10 segundos y podéis ahí votar 5 si os ha gustado muchísimo y de ahí para abajo si os ha gustado menos, lógicamente. ¿Vale? Así que nada, muchísimas gracias por vuestra votación. Ya sabéis, vamos a ir haciendo esta votación al final de cada una de las ponencias. Os estamos muy agradecidos por la interacción. Si os parece, vamos ya con la segunda idea de este BIOS 5.
En Fidelity llevamos más de 50 años creando valor para nuestros clientes. Su confianza se traduce en más de 410.000 millones de euros gestionados en todo el mundo. Generamos oportunidades gracias a nuestro análisis propio. Independencia. Carácter innovador. Orientación al cliente. Trabajamos día a día para seguir generando confianza y valor.
Viajamos ahora a Londres, donde ya nos espera Velislava Dimitrova. Esta gestora busca soluciones a uno de los grandes problemas de nuestro tiempo, el cambio climático, y lo hace seleccionando las mejores empresas para combatirlo. Para sentir mejor sus efectos, le ayudan las caminatas por la montaña que le gusta practicar con su familia. Velislava, gracias por participar en esta nueva edición de Finect BIOS. Adelante.
Velislava, el escenario virtual es tuyo.
Hi everyone, and thank you very much for joining us today. I will present to you a very exciting opportunity, and this is Fidelity Sustainable Climate Solutions Fund. But let me start with a few reasons why you need to invest in climate solutions. This is because we believe that climate change is the biggest risk to the global economy and to our way of life. And we believe that investors can play a huge role in solving the crisis. Secondly, because we believe that decarbonization will be the largest investment megatrend in our lifetimes. And finally, because we believe that decarbonization actually poses significant risks to client portfolios because of the disintermediation to many businesses globally. Now, These days, it is very difficult to open a news source without seeing a headline about the devastating impact of climate change. And I'm sure you're very aware of all of those. But just a quick reminder, we know that we're on a path to more than 2 degrees global warming over the next 20 to 30 years. And this will lead to devastating consequences. It will lead to 1.2 billion people exposed to lethal heat waves. It will lead to more than 70% decline in water supply in the Mediterranean and parts of the US. And you can see more here, but most worrying of all will be the accelerated release of carbon because of melting of the permafrost. Now, we have looked at what are the solutions? How can we solve the problem? And fortunately, the solutions are now on the table. They exist today. If we are to fully adopt all those solutions globally today, we can reduce the carbon footprint of the global economy by more than 80%. Now, this is where the good news ends. We need to adopt these solutions very fast. Historically, it has taken cars 90 years for full adoption. It took power generation 47 years. We don't have that long. We have less than 30 years for full adoption of a very long list of solutions. And this is where our role as investors comes in. By investing in them, we can scale them and we can accelerate that adoption significantly. The second reason why you should invest in climate solutions is because this is a huge investment opportunity over many decades. According to Goldman, we need to invest $4.8 trillion a year out to 2050 every year. This is a cumulative of $144 trillion or 7 times current US GDP if we are to decarbonize. But this is not only hypothetical. We believe that we're now at the inflection point of decarbonization. And this is because of huge momentum behind it. Governments now around the world are promising zero carbon. More than 60% of countries have zero carbon targets. Short-term ambitious 2030 targets are also very ambitious, with the European Union promising 55% reduction. And it's not only promises, stimulus is supporting decarbonization solutions as well. Consumers are changing their behaviors, particularly the younger generation. Attitudes towards electric vehicles are changing, towards second-hand goods is changing, and so on. And both of these, regulation and changing consumer behaviors, are leading to accelerating innovation. In the first half of this year alone, we saw 250 ventures, clean tech ventures, attracting 16 billion. This is up 50% over last year. Now, something which we believe investors focus less on and is hugely important, and this is the risk to client portfolios. These are 2 huge types of risk. These are climate change risk and decarbonization risk. And we believe that climate solutions can protect from both. The first one is indirect, in as much as this strategy and others similar to it can help solve the problem or accelerate the solution to it. And we know that the risk is huge because insurance premiums are rising because of extreme weather events becoming more frequent. We know that bankruptcies are likely to increase. Litigation is likely to increase. 2018 saw the first climate bankruptcy. A Californian utility, PG&E, filed for bankruptcy because the largest wildfire in a century in California. But even more importantly for the Climate Solutions Fund is decarbonization risk. This will be a very fast technological shift that will affect all areas of our lives. And it will leave many businesses, many assets stranded along the value chain of those decarbonization solutions. The most obvious ones, which you're well aware of, are oil and gas and coal, internal combustion vehicles. But even less obvious ones like alternative meats, because we're likely to switch to more alternative protein or plant-based protein or lab-grown meat, things that have lower impact on the environment. And companies are likely to get disintermediated. Another type of risk that will affect even more companies is carbon pricing. Now, there are carbon schemes globally, but they do not affect all geographies, and they do not include all sectors. And we believe that the scope of these carbon schemes will increase and the carbon price will increase, increasing cost base for many companies. And finally, a regulatory risk. We're seeing regulation accelerated, increasingly pushed towards decarbonization, and companies will have to pay more. For example, in plastic packaging in Europe, now regulation is pushing companies to invest into more expensive solutions, to more environmentally friendly packaging solution, which again increases the cost base for many businesses. Now we have looked at the competitive landscape, and what we have found is that there is a proliferation of climate-related products, but not all of them actually contribute to decarbonization. One example is low carbon funds. This is a large part of funds on the market. They look at the carbon footprint of the fund itself. But this is very limited scope in nature because you can very easily create a low carbon fund by avoiding the biggest polluters, utilities, industrials, materials. You just avoid these companies. But we cannot live without these products. And these are exactly the type of companies that need to decarbonize. Another type of funds, which has come recently to the market, we call environmental funds. They also invest in the beneficiaries of climate change, like water scarcity or healthcare or infrastructure, and that's great. But these industries, again, cannot help us solve the problem. They cannot help us decarbonize. And this is where the Climate Solutions Fund comes in. This is a fund that invests along the full value chain of technologies that have lower carbon footprint than the legacy technology. It is possible to diversify across sectors and technologies and geographically because of the sheer scale of solutions that are available. This is not a fund that is focused only on, let's say, renewables or electric vehicles like clean tech funds. But it is also possible to protect the downside from disintermediation because actually you're investing in the disruptors, not the companies that will be disintermediating from the move to zero carbon. Another way to show this is here you can see the carbon footprint of the index versus the carbon footprint of the benchmark of the fund. And it is possible to have higher or lower carbon footprint than the benchmark. But this is a function of sector allocation, of investing in those companies that have inherently high carbon footprint, like utilities and technology and industrials. But what we believe is significantly more important is how the company's products contribute to decarbonization. Because the red bars you see are only scope 1 and 2 emissions. But we actually know that most of the emissions of a company occur upstream. These are scope 3 emissions, which are not accounted for in the carbon footprint of the fund usually. What we have done is we have looked at the products of the companies we invest in and how they contribute to decarbonization. And this is the green bar you see. If you invest $1 million in the fund today, you will save more than 2,400 carbon tons from being emitted in the atmosphere every year. The way we have done this calculation is looking at how the company's products contribute. Just to give an example, if we take Vestas, for example, a company manufacturing wind turbines, we looked at how many turbines they have manufactured over their lifetime and how many are in operation today, and the power that they generate, how many tons they're abating if these megawatt hours were manufactured by thermal coal. This is the carbon tons they're abating, saving from being released annually. And we believe that this impact dwarfs the impact of the carbon footprint of the fund itself. Now, what are these decarbonization solutions that I talk about? You can see them listed here in the middle column. We have identified more than 20 solutions, and this is where we're different. We don't invest only in renewables or electric vehicles. We invest in things like technologies that have existed for a while, like building insulation or recycling, and in very nascent, very new ones like green hydrogen, autonomous vehicles. Probably the most important part is on the right-hand side of this slide, and this is the true impact of these technologies. We have calculated the impact of each technology, the new technology versus the legacy technology. If we take a battery vehicle over its life cycle, from mining the ore to scrapping the vehicle, you have 50% lower emissions than an internal combustion vehicle. And this ranges from a low of 20% for industrial automation to a high of more than 90% for alternative meats or green hydrogen. Now, on this slide is why we're so excited about this product. This slide is showing on the x-axis, the contribution of the legacy technology to global emissions. So if we take the green bubble, 27% of global emissions come from thermal generation. This is coal and gas. And the solution to the problem, or renewables, is on the y-axis. It is penetrated at only 10% globally. If you look at these bubbles, we have plotted only a few of them. You can see that even the more advanced ones, like building insulation, are standing at around 20% penetration globally. Yet we need all these bubbles to be all the way at 100% penetration if we are to have a chance at decarbonizing. And what is most exciting is that we are currently at the inflection point of adoption of those technologies. If we look at electric vehicles, for example, last year they accounted for only 3% of global sales. This year we're now closer to 5 to 6%. And this is accelerating exponentially for a lot of these technologies. And they're very exciting companies to invest in. Just to give you a few examples, from very obvious ones like Play on the Cloud, Microsoft, or electric vehicles, Volkswagen, or industrial automation, Siemens, to very niche, more interesting companies like Linus. This is a company that is making rare earths, which are crucial for renewables or for electric vehicles. Or building insulation, Rockwool, a company making insulation to make homes more efficient and consume less energy. Now, I will give you a couple of examples for the themes we invest in. The first one is reuse, and we have picked this one because it is attracting less attention, yet it has significant potential. We know that fashion accounts for 10% of global emissions, so there's huge room for saving here. There was a survey done in 2016 showing that less than 50% of women were open to shopping secondhand. Over the course of 3 years, this has increased to 70%. And this is a function of proliferation of platforms where you can shop secondhand. It is a function of cost savings for the consumer. It is a function of increasing social acceptance. Now it's becoming more acceptable to be shopping secondhand. And this is a market set to explode in terms of growth. It is likely to increase in size to more than fast fashion over the next less than 10 years. And we actually own in the fund 2 companies that are exposed to this trend, resale platforms. Another example I would like to give you is power generation on renewables. Now, this is something where a technology you have heard a lot about because this is usually the first example people give in terms of decarbonization technology. But the reason I would like to mention it here is because we feel that the scope of the opportunity, the scale is still underestimated. And this is because we look at it differently. We don't look at current growth rates and extrapolate these going forward. What we do instead is we look at the endpoint. We look at the zero carbon future and say, what do we need to do to get there? How many renewables do we need to get to zero carbon? Renewables currently account for 10% of power generation. We need to replace entirely coal and gas if we are to get to zero. This means we need 6 times more renewables than we have today. But it is not only that. We need renewables to power the global fleet of electric vehicles. And for this, we need 2 times the current install base of renewables. We also need renewables to decarbonize the more difficult to tackle sectors like steel and cement, where there are very limited options to decarbonize. And the one available is green hydrogen. But for green hydrogen, we also need renewables. And for this, we need 10 times more renewables. So cumulatively, we're looking at 19 times more renewables required than we have today. This means increasing the installation rate per year by more than 4 times out to 2050. Now, you might look at climate solutions and think, well, I might have to sacrifice returns if I am to contribute to a common good cause like decarbonization. But we believe that this is not the case. We believe that companies that are exposed to the full value chain of decarbonization tools will grow faster than the market and will generate alpha above a benchmark. And we also believe that with the help of the unique position Fidelity is in, with the breadth and depth of research we have, we're able to identify those companies that will benefit disproportionately from that huge growth ahead of us. The fund has been running as a pilot for more than 3 years, and we have cumulative outperformance versus MSCI Acqui of more than 13% a year, and it was launched as a CCAF earlier this year. Thank you.
Muchas gracias, Belislava. Vamos a ir enseguida ya con las preguntas. Esta primera pregunta nos llegan, tenemos 2 preguntas desde el equipo de BVA Quality Funds, y esta primera nos la hace Luis González. Nos pregunta Luis, ante la emergencia climática que ya empieza a dar señales claras, ¿estamos a tiempo de paliar el problema que se nos avecina invirtiendo en fondos que ofrezcan soluciones climáticas?
This is a great question, thank you, and it's extremely important because we have very short window of opportunity. If we are to limit the consequences, that is, we have probably about 20 to 30 years to fully adopt those solutions. And this is why we feel that it is actually crucial that we invest in those type of funds, in climate solutions in particular, because we need help from everywhere to accelerate the adoption. We need governments to be behind and continue accelerating the push to decarbonization. We need consumers to be on board, but we also need investors. We need to scale these technologies even faster. Now, a lot of them are already at scale and are already economic. Like renewables, for example, this is the cheapest form of generation globally. It is cheaper than coal and gas, so it makes economic sense. Electric vehicles are on a path to becoming economic very soon. Without subsidies within the next several years, they will be on par with internal combustion vehicles, so naturally adoption will take off. But there are others like green hydrogen, for example, that are more expensive than the legacy solutions, and it needs investment to be able to scale quickly. We need as much capital to be channeled towards those technologies as possible if we are to stand a chance of decarbonizing within 20 to 30 years.
Esta segunda pregunta también nos llega desde el equipo de VA Quality Funds, nos la hace Juan Cortázar. Es así, dice, debido a que la descarbonización requerirá mucha inversión para que esas alternativas sean competitivas en precio, ¿es compatible la inversión en soluciones climáticas con una rentabilidad atractiva en el punto en el que estamos? Teniendo en cuenta las valoraciones actuales, entre otras cosas, por la fuerte entrada de inversión de flujos que se está produciendo.
Yes, you are right that with the capital going into some of these funds, valuations have now increased in some areas of the market, like renewables or electric vehicles. But we feel that this is the advantage of climate solutions, is the very broad range of technologies we can invest in, which allows us at times where the market is inflating multiples for some companies to move into other sectors that might be overlooked. One example would be insulation, and particularly in the US, these companies are trading on very attractive multiples because they're not attracting the same attention as the European ones where regulation is more favorable. But we believe that regulation will improve in the US as well. And we are able to reduce weights to sectors that multiples have inflated faster and increase weights to other areas where multiples are still more favorable. So we're able to, we're in a better position than clean tech funds who invest primarily in renewables and electric vehicles because we invest in other probably less obvious decarbonization tools.
Vamos con otra pregunta que nos llega. En este caso nos la ha enviado Álvaro de la Rosa, es selector de fondos temáticos en Avante. Le preocupa el tema de la recarga de coches eléctricos. Dice, la mayoría de los habitantes de grandes ciudades aparcan los coches en la calle, por lo que no tienen un punto de carga privado. Aunque cada vez haya más puntos de carga, si esto lleva 15 minutos mínimo de carga, seguramente veamos muchos tiempos de espera largos para hacer esa recarga del vehículo. ¿Existe alguna solución para este problema? ¿Tenéis alguna compañía en el fondo relacionada con la recarga de los vehículos eléctricos?
Yes, this is probably one of the barriers to adoption of electric vehicles alongside price. But at the moment, the solution to that problem would be to charge at home overnight. But technology is developing so quickly that currently companies are investing in solid-state batteries, which will allow significantly faster charging and will pretty much solve that problem. Now, we are still a few years away from that technology, but the scale of investment in it, so many companies investing in different type of technologies means that it will come to the market probably within the next 5 to 10 years. And at this point, when we have significantly larger penetration of electric vehicles, this will help solve the problem. In terms of charging companies, we actually used to own 2 of those in the fund. We used to own Alfen and Gero, and these companies did tremendously well. But to your previous point on valuation, this is the reason why we sold them, because they were starting to trade at extremely elevated multiples. Now, hopefully at some point in the future, companies like that will be attractive again and we can go back in. But at present, they're trading at very elevated multiples. But there are many companies, and increasingly more so coming to the market, who are investing in charging points, because this needs to be in place for adoption of electric vehicles to take off. We need to see significant expansion in charging infrastructure.
Uh-huh. Berislava, una última pregunta. Como periodista siempre nos preocupan estas cosas que vemos en los titulares y ahora estamos viendo mucho el problema de los costes, cómo han subido los costes de la electricidad en los hogares, en las empresas. ¿Crees que esto podría llegar a poner en cuestión el ambiente social a favor de las renovables cuando se empieza a ver ese coste tan elevado en la factura de la luz, que puede cambiar la percepción social de las energías?
This is an interesting point because reduced investment in the legacy technologies like oil and coal and the current very fast recovery out of COVID is leading to shortages and high prices. But actually what we believe that this will do is will push even faster adoption of those decarbonization solutions because it becomes more economic faster. It becomes economic to have an electric vehicle versus internal combustion vehicle, where not only is the price for oil increasing dramatically, but also you don't really have it here in the UK because of various reasons and disruption. And power prices as well. Power prices have skyrocketed mostly because of the price of gas. And this makes the alternative more economic faster. So it will accelerate the adoption of decarbonization solutions. And this is another reason why you need to be exposed to those solutions rather than the companies that will be disintermediated.
Ok, muchas gracias por tu respuesta. Veremos si avanza en esa línea, efectivamente, que sería bueno, desde luego, para el planeta. Así que muchísimas gracias por tu tiempo. Thanks a lot.
Thank you.
Si queréis ver la evolución y demás del fondo que nos acaba de traer desde Fidelity, ahí lo tenéis en Finect, este Sustainable Climate Solution Fund, interesante de seguir también, como todos los fondos de los que estamos hablando en esta quinta edición de BIOS, que podéis encontrar en el grupo BIOS en Finect, ¿de acuerdo? Ahí tenéis toda la información, los detalles, la ficha, documentos, los últimos comentarios, todo, valoraciones de asesores y demás. Así que os recomendamos seguirlos. Vamos a pasar a votar ahora, ya tenéis ahí la dirección para votar. Vamos a ir primero con qué os ha parecido esta idea de inversión relacionada con la descarbonización que nos han traído desde Fidelity, finect.com/bios. El tiempo para votar empieza ya. Vamos a ir con esas votaciones. Marcha atrás. ¿Qué os ha parecido? ¿Os ha gustado esta idea? ¿Meteríais en cartera esta idea de inversión ante la emergencia climática que tenemos por delante? Será interesante, veremos ahí vuestras valoraciones. ¿Qué tal lo estáis viendo? Vamos a seguir, recordad, finect.com/bios para votar la segunda votación de esta presentación, que en este caso es qué os ha parecido los argumentos expuestos, la presentación que se ha realizado, cómo ha respondido a las preguntas. Vamos con ello si os parece. El tiempo para votar empieza ya. Estas ideas, estas nuevas ideas que estamos viendo hoy en esta nueva edición de Finect BIOS, en este caso con Berislava Dimitrova, gestora de este fondo de Fidelity que acabamos de conocer mejor. Muchísimas gracias por vuestras votaciones. Si os parece, vámonos ya a conocer la tercera idea de inversión. Ojo que ya llegamos al ecuador de esta primera jornada de BIOS 5. La tercera idea de inversión de esta sesión.
Nos vamos ahora a Hong Kong para saludar a Shannon Zeng. Qué mejor que viajar casi al epicentro de los mercados ahora mismo para ver las oportunidades que las tensiones políticas y las que estamos viendo en diversos sectores como el inmobiliario o el tecnológico están dejando en la bolsa china. Una actividad en la que hay retos importantes como los que le gusta superar caminando por las montañas, una de sus grandes pasiones. Pero quizá, tras el esfuerzo, unas vistas espectaculares. Adelante, Shannon.
Gracias por estar con nosotros. Shannon, tiempo para ti.
Hi everyone, this is Shannon Zheng from Hong Kong. So very happy to be here today and speak about China equity investing. So just a bit of background on myself. As you probably have just seen from the video, I'm a passionate hiker. But in addition to that, I'm also born and raised in mainland China. So today, very happy to be here and share with you what is going on in my home market. I know that China equity investing has been very topical these days, and big with China always on the headline, be it good or bad. So today, I just hope to help you go beyond these headlines, understand the underlying trend of equity investing in China, why it matters to you, and how to interpret the different noises and news around China. So with that, let's get started. First of all, let's take a look at how China is represented in global equities portfolio. Now, many people understand China is the second largest economy in the world, just after the US. China is very, very important in terms of global trade. China has an enormous population. But if you look at this particular slide, China is only around 5% in global equity indices. And that means if you invest in a global equity portfolio, out of $100, only $5 or even less goes to China. And if you compare this to the daily presence of China and Chinese economy in the global industry at the moment, is obviously an underrepresentation of China versus the rest of the world. Now, this comes with a very interesting background because China, especially China A-shares, those companies listed in Shanghai Stock Exchange and Shenzhen Stock Exchange, were used to be isolated from global investors. And for global investors, you only can access China A-shares through a quota system called QFII or RQFII quota system. But things started to change in 2014 and 2016 since the establishment of Stock Connect programs, allowing foreign investors to invest in China A without any restrictions of quota. Then China A-shares gradually become a very important part of the global investment universe. So ever since MSCI, one of the biggest index providers, included China A-shares into their flagship indices, investing in China is no longer a question of if, but a question of when and how. So very naturally, this has led to a rising interest from global investors to invest in China equities. On this particular slide, you will see an area chart, and this signals the cumulative fund flows into China A-shares from international investors. And you could see that over the past few years, despite of the ups and downs of Chinese equity indices, the trend is a very clear positive trend. So this basically demonstrates global investors' structural investment decision and longer-term time horizon when they invest into China. And also, I think investing in China is not only about matching up with indices. It also brings investors a good level of diversification because the companies that you can gain access to, especially within the China A-shares universe, is very unique. It can't be replicated through any other forms of offshore investment. For example, you might have heard that electric vehicle is a big trend, not only globally, but also in China. So the biggest electric vehicle battery maker and battery equipment makers are all listed onshore within China A-shares. If you think about the biggest white liquor brand in China, which is a national drink in China, you can only find them in China A-shares. And also, there are a lot of industry leaders in different areas within industrials, within technology, and a lot of these companies are listed in China A-shares as well. So gaining access to China A-shares basically give overseas investors a very good complementary opportunity set to what they can gain through offshore China investing. And that's also because China A-shares tends to behave in a very different manner compared to the international equity indices. It naturally gives you a diversification benefit if you are investing in global equities. For example, if you look at this particular page, the correlation coefficient in each cell, if you look at those cells, especially the highlighted area, the figure reads around 0.3 between China equity and world equities. It basically means 70% of the time, China A-shares behaved or returned in a different direction compared to international equities. And this is the diversification benefit that I have been talking about. So basically, I see there are longer-term reasons and there are structural reasons why investors should consider allocate part of their global equity portfolio into China, especially China A-shares. So this is a longer-term story, and I understand that from the recent news, there have been a lot of regulatory tightening going on in China, and these regulatory changes has been quite concerning for global investors as well. So in the next few slides, I'm gonna share with you how we interpret these regulatory changes. So before diving into the details this year, I would like to give you an overall background of how to interpret the policy goals of Chinese policymakers. So there are a few priorities, actually 3 priorities that policymakers are trying to achieve. The first is economic growth, second is social stability, and third is structural reforms. I know this is a very difficult triangles to achieve at the same time. So the policymakers are always trying to achieve a very delicate balance between these 3 different goals. And whenever the economy is on a stronger footing, i.e. the economic growth is quite strong, then we are more likely to see tightening measures to push through structural reforms in China. Actually, in the past, every 2 to 3 years, you will see a wave of regulatory tightening in China. For example, 2011, 2013, 2018, where we saw a significant deleveraging campaign in China, and 2021, which is this year, where we saw internet regulatory tightening as well as property tightening again. So incidentally, you could see that the equity market also behave together or in parallel with regulatory tightening. On this particular page, you will see these bar charts where the yellow bars actually represents the change in valuations for Chinese equities. You will see that in each of these tightening years, actually the equity market has behaved, has saw derating, which reflected the fear of investors in China, in Chinese equity market. But on hindsight, if you look at this, for the years that follows the years where derating happened, we always saw quite constructive, quite good returns from the Chinese equity market. So this, to me, signals that if we could have operated with the benefit of hindsight, we should always invest when others are more fearful. So far this year, we believe the regulatory tightenings are more like short-term pains for longer-term gains, because these measures are targeted to really solve some of the structural issues in China. For example, the monopoly of big tech firms in China. For example, the inequality that's caused by high education burden in China, and for example, the long-lasting property leveraging problems in China. So overall, I do think these measures are painful in the short term, but should position China very well for the longer-term sustainable growth in the future. I'm looking at how we our outlook for the rest of the year. Because of these tightening measures, of course, the real economy is also showing signs of gradual slowdown in China as well. So we believe that the policy direction towards the later half of the year to early next year should be tilting towards a slight easing direction. On this particular page, you will see that the interbanking rate, the SHIBA in China, has been on a gradual declining trend, which is reflecting an easing policy or monetary stance in China. And this overall should be quite favorable to the returns of the equity market. So despite of all these policy changes, how have international investors reacted to this? Actually, it's quite positive. If you look at this particular chart, this is the monthly equity flows through Stock Connect into China A-shares. And despite all these negative headlines towards China, we could see that over the past 11 months, there has always been consistent positive net monthly flows into China A-shares. And this basically reflects the longer-term confidence of global investors into China A-shares. And lastly, around valuation, I know that in many investors' mind, China A-shares has always been quite expensive. But looking at this chart, you will realize that over the past years, actually China A-shares has come down to quite reasonable valuations, especially after the year-to-date correction. Now China A-shares is trading below 15 times forward PE, very reasonable compared to to some of the developed markets, and also compared to its own history. So I would say that at the current moment, while China A-shares is not like dirt cheap as we saw in 2018, but the valuation is coming back to very reasonable valuations, especially for patient investors in China. So how can we access to the China A-shares? Now, within Allianz Global Investors, we do offer two options, which give you pure play into the China A-shares market, and one mixed option, which gives you a holistic approach into China. And for investors who are interested in allocating towards China A-shares, I would recommend Allianz China A Opportunities, which is the younger member of the family, where you can see on this particular page. And this strategy really leveraged off the longer-term expertise of Allianz Global Investors' capability in China A-shares. We have been operating a pure China A-shares portfolio since 2009, and so far we have 10 years, more than 10 years of very strong track record. And Allianz China A Opportunities is basically a more concentrated, higher conviction version of our flagship fund in China A-shares. And we believe for investors invested into China A with longer term horizon, this should be a very good option for you as well. Talking about the performance, so actually Allianz China A Opportunities has been accepted in January 2021, so this year. So far we have had less than one year of real track record. But as you can see on this particular slide, Allianz China A Opportunities and Allianz China A-shares have been tracking quite closely with each other over time, and also compared to the benchmark, the fund is also performing quite in line. And as such, please bear in mind that so far this year, the market condition has been very, very challenging, especially for active China A-shares managers. So we consider this as quite a solid set of performance for investors. And of course, over the longer term, we expect China A Opportunities to deliver more visible alpha when Chinese A-shares starts to be less sentiment driven and more driven by corporate fundamentals. So I think it's very important to examine the longer term performance of our flagship fund in China A-shares. On this particular page, you can see this is a bar chart showing the cumulative returns for Allianz China A-shares fund. As you can see that over different time horizons, we've managed to deliver quite strong and consistent alpha for investors with us. So we're confident that over the long term, we should repeat this performance and hopefully bring you very, very strong alpha as well. So that comes to the conclusion of my presentation today. So 3 key takeaways I want to share with you. First of all, is China A-shares is quite underrepresented within the global investors universe. We believe China A-shares will move from a good to have into a must have. So for investors who are interested in having a longer term allocation to China A-shares, we believe now is a good time to accumulate on weakness, because China has just gone through quite a painful period of reform, and this should set China into a very stronger footing for longer-term sustainable growth into the future. And lastly, if you choose to invest in China A-shares, we would recommend our China A-shares Opportunities Fund. Okay, that's all for my presentation today. And back to you.
Muchísimas gracias. La primera pregunta nos la ha enviado Diego Fernández Elices, que es director de inversiones en AIG. Voy a leerla para ti, Shannon. Dice, las prioridades chinas han cambiado bastante y todo lo que vaya en contra de la natalidad, la neutralidad de carbono, la regulación del capital o la prosperidad parece estar en riesgo. La regulación de la tecnología educativa planteó una vieja amenaza para los mercados chinos, que es que cada vez más sectores tienen el riesgo de transformarse en sectores sin ánimo de lucro. Esto probablemente genera grandes oportunidades de alfa, pero ¿pueden ser un gran riesgo para las inversiones pasivas en China? ¿Qué porcentaje del MSCI China está bajo ese riesgo?
So, thanks for the question. It's very valid. If I interpret the question correctly, basically means there are a lot of policy changes in China, providing performance headwinds for different companies. You know, what's the universe that are impacted in China? If I answer the questions very simply, I would say that no sectors or no companies is actually immune from policy risks or opportunities in China. As you could see, as you correctly pointed out, policy priorities has always been evolving gradually over time, and this correlates to the development cycle within China. For example, in the past, when China is more concerned around GDP growth, then policy priorities is to promote economic growth. And then later on, when the economy is at a more mature stage, then the policy is more focused on pushing through solving some structural issues, such as going through deleveraging in China, focusing more on the sort of the daily happiness of Chinese citizens through reducing educational costs or through reducing the property costs for the Chinese people. So you can see the priorities keeps changing over time. And even for the internet sector, when they were still emerging, then the policy environment was set deliberately to be very loose, so that these internet companies could grow very fast and become national champions and compete globally. And then when they're now more mature and gradually seen to be an additional source of financial risk, then you are seeing more regulations on these sectors. So I would say that we shouldn't take it for granted that there are lack of policy within certain sectors, such as the internet sector. It should only exist for some time, but the new normal is that more and more sectors, or even the entire market, should be interpreted within a sort of overall policy framework. And this doesn't necessarily come in a negative meaning, right? As you correctly point out, some sectors do enjoy policy opportunities. For example, at the moment, we do see opportunities in areas such as solar energy, wind energy, electric vehicles, some of the domestic semiconductor supply chains, because these companies should benefit from the longer-term self-sufficiency for China. Whereas there are some old economies, if these companies don't try to improve their technology or production process, they might be at risk because of more and tighter environmental regulations. So this is just one example of opportunities and risks. So in the end, I believe it makes a very good case for being very active within China, because you need a local pair of eyes to help you interpret what is going on instead of staying behind the market with the index changes.
Vamos con la segunda pregunta que nos llega de Tony Conde, que es responsable de gestión en Renta 4. Tony nos pregunta, las acciones locales en China han sido menos volátiles este año. ¿Cuál es vuestra interpretación de que esto haya sido así? ¿Es por ello que habéis considerado el lanzamiento de este fondo?
Thanks for the question. Actually, the rationale of launching China 80 Opportunities Fund is uncorrelated to the short-term market environment. Actually, we've always been trying to launch a more concentrated, higher conviction version of our flagship Allianz China Asia's Fund for quite some time. It just so happens that after our internal and all the regulatory approval process, we managed to launch the fund in January of 2021. So this basically this is much a longer term outlook. We believe that there should be still investors interested in China Asia's, and we want to provide them with different choices when accessing the China Asia's market. But back to your comment around lower volatility of the onshore market, China Asia's versus offshore. Actually, this has been the case for the past, I think, 4 to 5 years, that China Asia's actually traded at similar, if not lower volatility to offshore China. And this basically reflects the increasing convergence of these two markets, with more investors going to the other market. And also the fact that so far this year, offshore China has been more severely hit by the tightening regulations on internet companies. And most internet companies are listed actually in offshore China, in Hong Kong or US, rather than China Asia's. So the policy direction partly explained the lower volatility of China Asia's this year.
La gestión del fondo es activa, centrada en análisis de compañías a través de sus fundamentales. Actualmente, los fundamentales no son el catalizador de algunas compañías según el sector en el que estén. ¿Tenéis en cuenta aspectos macroeconómicos o de regulación en la valoración fundamental de las compañías?
Sure, actually that's a very good observation. Indeed, so far this year, fundamental active investors have had quite difficult time outperforming the market in China Asia's. And as you said, that's because a lot of times there has been a lot of thematic trades in China, and that's quite irrelevant of corporate fundamentals. Basically, within one sector, there isn't as much differentiation as we hope it to be. But this is not a new phenomenon in China Asia's. Actually, whenever in history, there has been a lot of market time periods where the market was more sentiment driven rather than fundamental driven. But let's say with these time periods are usually relatively short-lived, because in the end, investors need to find companies that actually do create value for them, right? Rather than just the very simple statement that this company is part of the EV supply chain. It needs to make revenue, generate cash flows that pay off the investors in forms of dividend or strong share prices. So we believe that ultimately it is the stronger companies should gain more market share at the expense of weaker companies. And this is especially relevant now because a lot of the industries in China have gone from a purely emerging industry to a more mature stage. So the internal competition of companies within these sectors will become more intense. And this basically means those real good companies can grow and become winner of the future. And not everyone can do so. So this is especially important that there is an active manager to help you to select these winners of the future instead of purely trading on thematics. But you also mentioned about policy changes and macro, and this is not something we intentionally ignore. Actually, we do monitor these macro trends as well as policy changes very actively. But the way we integrate these into our investment process is not through top-down allocation, i.e. market timing or sector timing, but rather we weave these policy interpretations into our fundamental stock analysis. And this is how we capture these trends within the portfolio.
Shannon, Última pregunta. Aquí en España es muy popular que los inversores inviertan o conocen la historia de Tencent o Alibaba, incluso algunos han estado comprando. Claro, están preocupados con estas caídas, también con el sector financiero, ¿no? ¿Cómo ves tú estos dos sectores?
Sure. So actually, this is quite a broad question. So I'll just provide some of my views. In terms of the internet companies, I would say that they have been under policy, I would say attacked, but they have been the policy victims so far this year. And we need to understand that the policy changes are not set to put an end to the business model of these companies, especially for the big internet houses such as Tencent, Baba, or JD. But rather, it's a catch-up of regulation. The market environment that they operate in will come from a very regulatory light environment towards a more normalized regulatory environment, just like any other sector within China. How do we interpret this? So basically, going forward, people need to adjust some of their business outlooks of these companies. They may no longer be able to, grow as fast as they used to be. So people need to adjust slightly to adjust down their growth outlook. But having said that, we still believe that these companies are still the powerhouse of innovation. They also represent significant sources of employment in China. So this is why we think they should still outgrow the overall market for the foreseeable future. So this is our overall interpretation of these internet companies in China. When it comes to financial companies, I think people always have criticized the financial sector and try to avoid the financial sector. But I would say that not all financial companies are created equal. So we need to make a differentiation about which subsector they're operating in. And also even within the same subsector, we also need to differentiate the better quality banks, for example, versus the poor quality banks. Probably one of the more concerning topics this year is on the property sector because of potential bankruptcy of one of the biggest property developers in China. Actually, this is not new news for us. This has been sort of evolving in the marketplace for the past 1 year. So it has always been our view that the property market needs to see a slowdown and a gradual deleveraging, and this is directed by top-down policy direction. So we prefer to own those property developers where they have stronger capital position, and it's also in a stronger place to become the market consolidator. And we've intentionally avoided those with excessive leverage and may run into potential liquidity problems, such as the one in the news. And linking to other areas such as banks and insurance companies, actually the domino effect is not as significant as many China observers has feared. In fact, we believe the bankruptcy should be a painful but gradual restructure process rather than a very fast and disastrous complete collapse. So this means that the domino effect, negative domino effect to other areas should be relatively better controlled. And within the other non-property developer areas within financial, such as banks or insurance companies, then we do prefer to own those with a much stronger return on equity because of their unique company proposition or company brands, so that they could, in our view, more consistently outperform their peers. So this is how we view the overall financial sector. And for this fund in particular, at the moment, we have an slight underweight position within the financial sector.
Muy bien, muchísimas gracias, Shannon, por tu tiempo. Ha sido un placer tenerte con nosotros.
Thanks everyone for your time. Thank you very much.
Bueno, pues ahí veis, ¿no?, la importancia de conocer lo que está sucediendo en China, en las principales acciones en China, desde alguien que está prácticamente en el terreno, ¿no? Nos ha acompañado Shannon desde Hong Kong. pues eso, probablemente ese cambio cultural de la importancia que le da el gobierno chino a determinado equilibrio que a lo mejor aquí no percibimos, ¿no? Por eso es tan interesante conectar con los gestores en las distintas partes del mundo y que nos lo cuenten desde allí, ¿no? Con su toque, desde luego, cultural y de la actualidad que viven en cada uno de estos mercados. Bueno, ya sabéis, en el grupo de Finect Envíos tenéis la ficha de este fondo que ha estado comentando la gestora de Allianz Global Investors. Vamos a ir a la votación, si os parece, ¿vale? Recordad, tenéis que abrir en el navegador esta pestaña, finect.com/bios, porque enseguida vamos a valorar primero la idea de inversión, ¿Qué os parece esta idea de inversión en oportunidad, de buscar oportunidades en compañías chinas en esa clase A, que nos ha contado Shannon Zeng? El tiempo para votar empieza ya. Ahí tenéis la URL, la dirección, finect.com/bios. Ahí accedéis y podéis valorar esta idea. ¿Meteríais ahora en cartera china? Y si metéis cartera esta idea que nos ha comentado en particular Shannon Zeng. Muy bien, muchísimas gracias por vuestra interactividad, por vuestra participación. Vamos a ir ahora con la segunda de las encuestas, que es ¿qué os ha parecido, cómo ha contado y cómo ha argumentado esta idea de inversión Shannon Zeng, que recuerdo es especialista de producto de Allianz Global Investors? El tiempo para votar empieza ya. A mí es que me encanta esto de gestores en todas partes del mundo, la verdad, que es una cosa maravillosa, cómo podemos conectar precisamente a través de la tecnología con estas ideas. Y no sé cómo lo veis vosotros, no sé si veis vosotros que esta situación que estamos teniendo con el gran... Fijaos, decía Shannon Zeng, parecía que el mundo le daba una importancia que ellos no le daban tanta, y efectivamente los mercados vuelven a estar, los americanos, cerca de máximos otra vez, ya veremos si llegan o no. Bueno, eso es interesante. Muchas gracias, como digo, por vuestra interacción. Ojo, que nos quedan ya pocas ideas. Hoy solo una, mañana otras 4 muy buenas, pero hoy solo una que vamos a descubrir enseguida con la última de las ideas de esta primera jornada de BIOS 5.
Esta primera jornada de BIOS 5 la cerramos en París, donde vamos a conectar ahora con Pierre Berlet, gestor de Carmignac Risk Managers. Pierre busca oportunidades en empresas de calidad y lo hace invirtiendo en bonos corporativos, un área en el que ya acumula 17 años de experiencia. Sus carteras tienen tanto crédito como el que se ha ganado su querido PSG con el fichaje este 2020 de Leo Messi, un equipo del que fue directivo durante 3 años. Bienvenido, Pierre, te escuchamos.
Pierre, gracias por estar con nosotros. El escenario es tuyo.
Gracias, Vicente. So, I'm Pierre Verlet, Head of Credit of Carmignac, and we all know that we are going through a prolonged period of financial repression. And in this environment, I'm often asked how to deliver performance with credit opportunities. And it's fair to say that over the last 15 or 20 years, most of the performance from credit funds have been coming from rate compression and compression of market premia. And those two drivers are essentially at very tight levels. So they will move, but from very, very, very tight level, and we shouldn't expect them to be the big drivers for performance. But one should never forget that credit was before that, was and should always have been about idiosyncratic risk. Credit is about the opportunities coming from the mispricing of idiosyncratic situations. To say things differently, credit performance has been driven to a large extent by beta moves, by macro elements in the last 20 years, but now it's all about alpha. And if you look at the impact of financial repression on average performance of Euro investment grade funds over the last 20 years, you see a clear downward trend. But if you look, what is striking is that if you look at the difference between the top and bottom performers of credit funds, this difference is stable, or it's actually even rising over time. And that's normal because this difference comes from the mistakes performed by the investors. And those mistakes are actually not impaired. They are even fueled by the financial repression and the current environment. All the more that any mistake in a very low yield environment is extremely painful for a fund manager. And this fear of idiosyncratic situations is what creates opportunities, and those opportunities that a good bond picking team can seize to deliver performance. And this is really for that kind of environment that we have designed our credit team at Carmignac. We've been working on those situations like this for many years, and we've designed this Carmignac Portfolio Credit Fund to seize those opportunities, specific and idiosyncratic opportunities. So this fund is an opportunistic fund predominantly invested in Euro developed markets, investment grade rated bonds. Everything we do is liquid and trading, but we can buy some high yield securities. We can buy some emerging market securities. We can buy some structured credit securities. We can also buy non-euro denominated bonds, but always with a cap to keep the fund very liquid, and always when we invest outside of euro denominated instruments, hedging the currency risk. So it's really an opportunistic credit fund which aims at maximizing the compensation received by the fund net of the fundamental cost of risk across our entire risk spectrum. When I became head of credit at the very beginning of 2015 at Carmignac, the first thing I've done was to hire Alexandre Neuville, who manages this fund with me, and Florian Viros, who is also essential to our credit strategies. And by far, it's the best thing I've done professionally. And we are at the center of the entire management team. We sit within fixed income and we exchange with them more than a daily basis, but we also exchange with the sector specialist who sits on the equity team on a daily basis. So in total, we manage between 11 and 12 billion euro equivalent of credit and structured credit instruments, always with this opportunistic mandate, which aims at maximizing the remuneration net of the fundamental cost of risk. And global credit is a wonderful asset class for value investing. It's a wonderful asset class because it's super broad. It's much, much broader than the stock market. You have much more bonds than you have stocks. Every bond has its own technical features, meaning that it's very suitable for financial analysis. And at the same time, you have, probably because there are too many bonds, at the same time, you don't have a good sell-side publishing research. So it's perfect for a team which wants to do some idiosyncratic selection, some bond picking. And it's perfect also for value investing, because even if you invest on a market sentiment, that is a perception of the risk by the market, you make your return based on a contract. You make your return based on coupon payments and on a repayment at maturity. It's very different from the equity market, where you enter on a market sentiment, that is a multiple at which trade a stock, but you make the vast majority of your return based on the change in this market sentiment. In credit, you enter on a market sentiment, that is a perception of risk, and you make your return based on a contract. We come across hundreds of issuers or potential issuers per year. Usually when they come to market to issue bonds, that's when they are the most available. And we meet management team, we prepare our meetings, we put down our notes, eventually our models. But even if we rarely invest right away, This database is what allows us 6 months later or 5 years later, and I've always worked like this, to react quickly when there is market volatility or when there is an idiosyncratic risk which has become more perceived by the market. If you have performed your analysis in advance, you know on what to focus when the opportunities arise. And that's how we select the situations on which we do more work. And then when we have fully understood a business model, fully understood a capital structure and a bond documentation, we select the opportunities we want to buy, and we buy them knowing that everything in our job is about diversification and correlation of risk. And to understand the correlation of risk, you need to understand the business models as well. And this is what we love to do day in, day out, understanding business models, capital structures, bond documentation. That way, we estimate probabilities of defaults, losses given default, and that gives us an estimated fundamental cost of risk. And we aim at maximizing the credit spread on the instruments we buy, net of those fundamental costs of risk. Of course, we are also invested in traded instruments, which have a market price every day. And we know something that the market tends to forget from time to time, that the best protection against volatility has always been and remains the carry, the credit spread. And we want the spread, the credit spread, the carry, call that whatever you want. We want this carry plus the roll down, the fact that the maturity decreases by a year every year, the carry plus roll down to compensate for any potential price drop due to volatility in the market. And the combination of that is we don't try to deliver a constant performance year after year. I actually think it's a big mistake performed by most absolute return funds, and they tend to target, they target a return, and that leads them to take too much risk when markets are expensive, and actually even not enough risk when markets offer value when risk is cheap. We do the opposite. We start everything we do from our estimation of the risk, not from the estimation of the risk by the market. And we are not shy of hiding in let's say low single digit situations when the market is expensive to deliver a bit of carry, and which allows us to be patient, and then to go and to buy attractively priced risk when market is volatile, when there is a bit of dislocation. And we aim at delivering mid-single digit net on the Euro A shares through the cycle as a combination of low single digit when markets are expensive and high single digits when markets are cheap. And we've performed much higher than that since the fund has been launched, but we always prefer to under-promise and over-deliver. And you can see that it's exactly what we've done during the COVID-19 crisis at the beginning of the pandemic last year. We had started the year defensively positioned with strong fundamental businesses. That's almost always the case in our portfolio, but a lot of protection and a lot of cash. And as the markets widened more than our estimation of the fundamental cost of risk, we progressively decreased the protections. And then when it became clear that there would not be a liquidity crisis, we reallocated the large cash position in super liquid, long-dated, investment-grade rated bonds, which offered plenty of value. And that was a smooth transition, exactly based on our process, a process that we had disclosed many times to our investors. And if you look at the performance of this fund year after year, you see that there are times when we are, let's say, not shy of not trying to be heroes. 2017 was a very difficult environment, expensive and getting more expensive. But I'm very proud of the performance in 2018 when we delivered a low net single digit performance when vast majority of our competitors lost money. The performance in 2019 and 2020 was much superior, but again, it's not directional bets. It's just seizing the opportunities. And this year is not different. We seize opportunities. We are in a market where we see plenty of attractive opportunities, despite the fact that the market is, on average, very, very tight. If you look at the performance drivers of this fund, it's really important to know that they are super diverse. And behind every number you see on these slides, you actually have dozens of performers. The fund is very diversified, it's highly diversified. And you see that the drivers differ year after year. And that's normal because you don't deliver performance the same way in 2017 or in 2020 or in 2019 or in 2021. You deliver performance in a different manner. And our team is actually a team of fundamental investors, but I think what is really critical is we are fundamental investors, but we understand markets. We understand technicalities of markets. And usually you have either fundamental investors or technical investors. We are both, and it's important because that allows you to deliver in very different environments. So we have, and unfortunately, I don't have time to go through all our case studies, but we have very, very different opportunities, even in today, that we buy today. It can be an investment grade rated issuer with extremely valuable holdings in e-commerce and tech. It can be sandal manufacturers in the hands with a high leverage, but in the hands of the right shareholder. A recovering complicated bank in Portugal, luxury resorts in the periphery, a mobile phone infrastructure or CLO tranches. What is the common denominator is there is always a complexity premium. All those assets are liquid, but they come with a complexity premium, and which makes them not that easy to analyze for everyone. And the perception of risk is much, much higher than what our analysis tell us. So as a conclusion, before we start the questions, we are positioned to capture super attractive idiosyncratic opportunities, and we see plenty of those opportunities, as I've just mentioned, while controlling the market risk, because you see expensive market, but those expensive levels in indices and in averages, they hide a very high level of discrepancies and very segmented markets with plenty of attractive opportunities. So we are, to cut a long story short, to conclude before the questions, positioned to capture alpha while containing the beta.
Ok, muchas gracias, Pierre. Vamos a ir ya con las preguntas que tenemos. Esta primera pregunta nos la hace Daniel Pérez Alegría, que es el lector de fondos de inversión y gestor de carteras en Cow Markets, y nos pregunta cómo es posible, dice, que un fondo con un enfoque tan centrado en el control de riesgo haya generado rentabilidades así de positivas estos últimos años.
I think this is precisely the fact that we control risk when risk is expensively priced that allows us to go for attractive risk when there is a dislocation. Our job is not about not taking risk. Our job is about taking risk for which we are paid in excess of in high excess. And if you look at if you are patient and controlling the risk when markets are expensive and just trying to deliver a bit of return, like in 2018, low return, then when the opportunities arise, when everybody has been decimated because they were too greedy when they should not have been greedy, then you have plenty of opportunities. And I think that's precisely because we control risk that we can buy some very attractively priced risk when when everyone is suffering.
La siguiente pregunta que tenemos es ¿cómo aplicas, con qué objetivo aplicas las coberturas y qué aportan a la cartera estas coberturas?
Very good question, thank you. So I would distinguish two types of, or three types of hedgings. You have the one linked to currency. So when we buy a bond denominated in dollar, we have zero view on the direction of the euro dollar, so we hedge. If we buy something in not denominated in euros, we hedge. That's as simple as that. So the result is you have a credit fund in euros if you buy the euro share. It can be a credit fund in dollar if you buy the dollar shares, but you have a credit fund with no currency risk. So it's very systematic. We manage to some extent also the duration via hedges, notably when so we are not going to trade the duration. It's not going to be a performance driver, but we want the duration to remain within a band. Typically, and if you look at the reaction of the portfolio, yes, the reaction of the portfolio, I'm on slide 30, during the month of May, when you had a big first repricing of rates, the fund behaved very well because we have a very controlled duration, and that's the nature of the positions behind, but that's also because we hedge part of our duration risk. And the last big hedge is let's say the one with CDX high yield or CDX EM or crossover. And if you look at the performance of this line, let's be clear, it has not created value for the fund. It has cost to the fund since inception. That's a line index CDS, and that's a market hedge. That's when we want to reduce the beta in a position. And it's normal that it's negative for two reasons. First, because it's an insurance premium. This is what allows us to capture more risk. You know, it's like having a seat belt in your car. When there is a dislocation in the market, that gives you a bit of performance, which allows you to take more risk when there is, at the, let's say, hopefully at the end or after a big market correction, the performance coming from the hedges allows you to take more risk. And it's to smooth the volatility. And last but not least, it's also what allows us to we wouldn't have the same long portfolio if we were not able to hedge the same with, let's say, the crossover. So over the life of the fund, it's normal that those hedges, those index CDS, will cost moderately, but they will bring a smoother performance. They will allow us to take more risk when market is cheap, and more importantly, they will allow us to take more idiosyncratic long positions.
Esta pregunta nos la envía Diego Fernández Elices, que es director de inversiones en AIG. Comenta, dice, la dinámica de la demanda de compra de bonos ha cambiado tanto con los programas de compra de los bancos centrales que las consecuencias de volver a los viejos tiempos son muy inciertas. ¿Espera que los aspectos técnicos del mercado cambien con el tapering o es una historia más a largo plazo?
So again, an excellent question, markets, and not only credit markets. Actually, credit markets might be amongst, particularly high yield markets are probably one of the asset classes with the lowest duration compared with, private equity, real estate, or public equities, or whatever you want. But markets are addicted to those unconventional monetary policies, which have become very conventional. And I think it became clear to everyone last year that they are now the norm. Injecting liquidity, it was all the more visible last year that there was no moral hazard compared with a normal financial crisis. But I think markets realized that injections of liquidity were the new normal every time there was a problem. So markets are addicted to those policies, and they have made it very clear to central bankers that they are addicted, and we've seen that in the first tapering. That doesn't mean that rates and liquidities are going to remain as abundant as they have in the last few years. But it's very difficult to imagine a violent tapering. So everything will be very progressive, and I don't think we will see. And to be fair, in the last 10 years, I haven't seen a good business defaulting because cash was difficult to get. So it doesn't mean that there are no defaults, because defaults actually come from disruption. They come from investors' mistakes. They don't. I mean, the defaults normally shouldn't come from the lack of credit. They should come from fundamental reasons. But we will of course have an impact on spreads, and spreads will widen. But I don't expect. I really don't expect that there will be massive defaults because central banks withdraw the liquidity too suddenly. Because the markets are too addicted, and not only the credit markets. I think the credit markets probably are the ones where it would be it would not that be that painful. And to be fair with you, there is nothing I would love more than central bankers withdrawing the liquidities, because that would create an amazing number of opportunities. But I don't think that will happen. I think we will have something much more progressive, and I think that injecting liquidity in the system will, unfortunately, and I say unfortunately because my job would be much easier without that. Unfortunately, it will remain the norm for future crises, not exactly with the same magnitude as in 2020, but I think central bankers have discovered a new tool, so they will probably continue to use it, even if they taper in the meantime.
Ok, pues muchísimas gracias, Pierre. Hemos llegado al final del tiempo, lo cual tenemos alguna pregunta más, pero la tenemos que dejar. Así que muchísimas gracias por haber estado hoy con nosotros. Thanks a lot, Pierre.
Muchas gracias.
Merci. Gracias. Pues vamos a pasar ya, si os parece, a valorar esta idea de inversión que nos ha traído Pierre Berlet de Carmignac Risk Managers. Vamos, si os parece, recordad, tenéis que tener abierto finect.com/bios, ¿vale? Finect.com/bios, ya es las últimas votaciones que hacemos hoy, ahí tenéis la dirección. Espero que lo tengáis ya, porque el tiempo para votar esta idea de inversión en este mercado de crédito, el tiempo para votar esta idea de inversión empieza ya. Vamos con esos últimos segundos. Menú variado el que os hemos traído hoy. Empezábamos con Big Data. Teníamos un poquito también de transición energética, de descarbonización. Gracias por vuestras votaciones. Vamos a ir con la segunda de las votaciones para valorarla a Pierre. En este caso, ¿qué os ha parecido la presentación que ha realizado Pierre, cómo la ha expuesto, cómo ha respondido a las preguntas? Vamos con ello. Finect.com/bios, el tiempo para votar empieza ya. Vamos con ellos. Esos 10 segundos, decía, me quedaba ahí estas dos últimas que hemos tenido, esta más de crédito, más para un perfil más moderado, y la de la renta variable de China. Yo creo que ha sido interesante esta jornada inicial, de las dos que tenemos, de Finect BIOS, de la quinta edición de Finect BIOS, que ya sabéis que es posible gracias ¿a quién? A vosotros. Gracias a vosotros que la estáis viendo, pero por supuesto también gracias a los partners que nos acompañan en esta quinta edición de BIOS, empezando por supuesto por Allianz Global Investors, como decía Carmiñac, Risk Managers también, por supuesto, Edmond de Rothschild Asset Management, Fidelity International, M&G Investments, Natixis Investment Managers, Nordea Asset Management y Fontobel Asset Management, por supuesto también con las asociaciones que nos ayudan también a que este contenido pueda llegar a los asesores financieros y les sirva, o a los analistas certificados, y les sirva para poder así obtener horas de recertificación. Nuestras asociaciones amigas EFPA España, CFA Institute y por supuesto a SEAFI. Muchas gracias también a ellos por estar ahí. Mañana tenemos otro día con otras 4 ideas bien interesantes, con ponencias muy buenas, un poquito de todo. Vamos a tener empresas disruptoras, vamos a tener dividendos, que nos gustan mucho los dividendos también, en mercados emergentes también, y compañías para tu bienestar incluso, unas ideas interesantes las que vienen mañana. En fin, ya sabéis, en el grupo de Finect BIOS, entráis en Finect, buscáis el grupo BIOS, ahí tenéis el enlace, los que sois asesores, los que podéis optar a estas horas de recertificación, tenéis el enlace para acceder y poder responder a las preguntas. Si pasáis el test, pues tendréis las horas de recertificación, como es lógico. ¿De acuerdo? Y tenéis también la pestaña con las presentaciones que ha ido realizando los gestores y, por supuesto, con los fondos de inversión de los que se ha hablado, por si os interesan, ya sabéis, con la información incluso de cómo contratarlos, ver todos los detalles y demás. Que eso es lo que queremos, acercar a los inversores la forma de contratar también los mejores productos financieros. Así que muchísimas gracias a todos. Mañana a las 4:30 paso lista. A las 4:30 os quiero ver a todos ahí siguiendo esta segunda jornada tan interesante de Finect BIOS. ¡Hasta mañana!